Hi folks, welcome to this other example on items that would be included in the current asset cash balance. And again, in this question, not only do you need to identify what goes in the current asset account for cash, but if there's any item in numbers 1 to 10 that does not, you have to tell us where it goes in the financial statement and how it would be classified. Now, the installment accounts receivable, they're due in 2012, and don't forget they're part of your trade receivables. So clearly it's a receivable that's current because it's due in 2012, which is within 1 year from the date at which you're doing statements. So that amount there would be a current asset, and it's an installment receivable, again part of your trade receivables. But notice now item number 2, it says you have a checking account at the Bank of Montreal that has $200,000 in it. Well, that's always part of your cash balance, whatever is in your bank accounts, because that's part of your corporate cash balance that you're including on your financial statements. That's cash in a company account that's available to them. Now notice that you also have a bank overdraft of $5,000 that exists at a different bank. So that means because it's an overdraft, it's at a different bank, this overdraft amount of $5,000 cannot be netted out against this $200,000 because these are being held at two separate banks. So this bank overdraft is going to be considered a current liability. So we have it as a current liability, bank overdraft. And again, a bank overdraft, if it's at a different bank from your checking account, is a current liability because it's something that you have to pay back to the bank immediately. They don't allow it to stay in an overdraft position for an ongoing period of time. Now, we also have a separate cash fund of $10,000, which is restricted, but it's for the payment of a current amount, which is your income taxes, the amount that's payable on those. Any amount that you owe to the government in terms of income taxes, again, in this case, we said it was payable January 15th, 2012, so you know it's current, but the government doesn't wait for its money. So we know that that amount of that separate cash fund has to be part of your current asset cash balance. Now it says it's in a separate fund. First of all, we don't need it to be in a separate fund, but because it is, we have to add it to our existing balance of $200,000. Not that it's part of this amount of $200,000, it's not, but it is going to be part of the current asset cash balance. The $200,000 plus this $10,000 is all going to be considered part of our current asset cash balance. Now, we also have a money market mutual fund that exists at the Bank of Montreal for $15,000. Because it's got a checking privilege regardless of what bank it's at. This happens to be at the same bank where we have our cash account, but no matter where, it's still considered to be part of your current asset cash balance because it has a checking privilege. So we're going to add it in. So therefore, you can see we have no other items in our current asset cash balance, so our total is going to be $225,000. So now we know that items 6 through 10 are going into different accounts, so let's see where they go. Well, first of all, in item 6, we have a term deposit of $20,000 that we bought from BMO at the end of the year, for which we're doing statements, but it's due in 45 days. Because that's within the 3-month period, we know that term deposit is going to be a cash equivalent. So now what we're going to do in item 6, we're going to say it's a current item, cash equivalent, and it's specifically a current asset because we did have to show how it would be classified, right? It said here, to show how it would be classified in the financial statements, and it would be current asset. Now, the other item here, the compensating cash balance of $20,000, it's kept on the checking account, and again, it's a minimum balance that must be kept in this account. So by definition, that's already part of your $200,000. So we would just say that it's as we said here, that the compensating balance is already included in cash, so it's already in that $200,000, so it doesn't go in here, right? But some of you, when you did this question, you itemized it as not going in any classification and put it in the table, but I could see that you meant it was part of the current asset cash balance because you specifically said that. So it's important that you realize that any compensating balance is always part of your checking account balance for your corporation. Now it says we have a post-dated check here, January 18th, 2012, $10,000 for a customer as an advance on work that's going to be performed next month. But the idea is we can't cash it yet. So it's not going to go anywhere. It stays in our vault or in our strong box as an item that as at December 31st, 2011, isn't anything to us. It's just a check we can't cash. So we would put it here as a classification that we can't make, so it's not applicable, it doesn't go anywhere, but we should identify that it can't be cashed to the 18th, so it stays in the vault. All right. Now what we have is we also have here an unamortized bond discount of $25,000 that's due in a bond liability, which we can see as long-term. The bond's due January 1st, 2016. So in this case, in item 9, it's a non-current liability, it's a contra liability, and you can set it up as an unamortized bond discount. Some students just set it up as a non-current liability, and instead of an unamortized bond discount, they just said it was a part of the bond payable, and it would be, but don't forget it's a contra account, right? So it would be your bond payable at face value less the unamortized discount. So it impacts your balance in the bond payable, so I accepted that as well as part of your answer. Now, the last item was that a customer check for $250 was returned NSF by the Bank of Montreal, which means that our bank, the Bank of Montreal, got back to us and said, hey, you know what, we couldn't put this amount from your customer in your account because the check bounced. So in other words, to us, we would say to the customer, well, you still owe us $250, so it's still sitting in your account receivable. So in this case, it's a current asset and it's part of your accounts receivable. So hopefully this has helped you to understand which items go in your current asset cash balance and which don't, and for those that don't, where they might be classified or how they'd be handled, including any of your compensating balances. So this concludes our video on this short quiz.